William Bonner, Empire of Debt, The Rise of an Epic Financial Crisis, Agora series. Empire of Debt, The Rise of an Epic Financial Crisis takes a hard look at how the United States, once a fast-growing economic superpower, has found itself entrenched in an unfathomable cycle of debt and financial instability. William Bonner expertly identifies the factors that have contributed to this situation, such as the abandonment of the gold standard, unchecked military spending, and the extent of U.S. borrowing from foreign nations. Issues such as globalization, the influence of China, and the shift in America's thinking about stocks and their valuation are explored in the context of the United States' growing debt. Prepare for a deep dive into how the complexities of these issues have developed, and examine the historical precedents that eerily foreshadow the current state of the nation.
From expansion to debt. The U.S. went from being the fastest-growing economy to becoming an imperialistic nation, invading countries to bring democracy. With the need to finance its army, it abolished the gold standard and entered the world of unbridled debt, borrowing from conquered nations. The dark side of borrowing. The United States debt crisis has been brewing for years, with borrowing becoming an increasingly problematic strategy. Historically, borrowing worked in favor of the country because the balance of trade tilted in its favor, but as the scales tipped and the country found itself with an annual trade deficit of $700 billion, borrowing became an increasingly unsustainable strategy. While the U.S. Federal Reserve encourages Americans to spend more, instead of saving, China has become America's largest trading partner and creditor, making the situation even more complex. As a result, every dollar earned by an Asian worker adds 6 cents to the U.S. debt. Additionally, the U.S. is burdened with an outdated manufacturing industry, overpaid workers, and a culture of spending rather than saving. The U.S. military budget is larger than any other country, and if the U.S. were to cut its military budget in half, it would still have the world's most advanced armed force. However, the consequences of the U.S. debt crisis are significant, and the impact of Asia's control over the economy is concerning. For example, if China sold its U.S. Treasury bonds, it could sink the U.S. economy. Furthermore, Americans are buying stocks hoping they will appreciate, forgetting that stocks were once valued more highly if they paid a dividend. The U.S. government spends borrowed money. For every dollar the government receives in tax revenues, it borrows another 80 cents. However, if China were to stop lending the U.S. approximately $300 billion annually, the U.S. would enter into a recession or depression. The rise and fall of the American empire. The United States of America has a precedent of amassing empires like many countries throughout history, all of which share a common outcome: eventual decline. Empires have economic implications, and they affect how their citizens view and interact with the rest of the world. America's foray into becoming an imperial force initiated under President Wilson, who saw himself as a world protagonist, led to shelling and invasion of Mexico, backing a rebel who murdered U.S. mining engineers, and ultimately drew the U.S. into World War I. The country spent euphorically, fueling an economy based on deficits, inflation, and credit, leading to an increase in federal spending with successive presidents. Instead of reducing defense spending after the fall of the Soviet Union in 1989, the U.S. continued to increase it and pumped money into Iraq, trying to persuade the country to like America. The rise and fall of the American empire serves as a cautionary tale of the dangers of imperialistic interests and unchecked spending. The future of American retirement. Americans need to prepare for retirement with caution and insight to avoid a financial crisis. According to recent data, the average American has $68,000 in retirement savings and increasing financial obligations. To retire comfortably in 10 to 15 years, one must aim to have a nest egg of at least $500,000, which requires early planning and saving. As investors age, they become more risk-averse, preferring income over appreciation in their portfolios, but current market trends make it difficult to ensure a secure retirement. Housing prices, in particular, have inflated, creating a real estate bubble that could soon burst. If this were to happen, many households could experience the same financial crisis that Japan experienced during its decade-long deflation, creating a real possibility that foreign creditors would be watching anxiously, leading to a sharp drop in the value of the US dollar. To avoid such a situation, Americans must take action to secure their retirements, even in the face of economic uncertainty. Master the art of essentialist investing. Speculation in the housing market and stock investments has led to distorted perceptions of investing, with people buying into information meant for the public rather than relying on private knowledge. In this book, you'll learn how to become an essentialist by studying the traditions and collective wisdom of past successful investors. Essentialist investors focus on making essential decisions that ensure survival and prioritize buying good companies with price-earnings ratios between 5 and 10, investing for the long term. They understand that houses do not increase in value but only in price, making them critical not to overestimate. Essentialists realize that investors tend to magnify each other's sentiments, making them miss an opportunity to profit from taking a contrary position. By going against prevailing investment winds, contrarians stand to gain while others lose out. As history teaches us, empires do not last, so wise investors prepare by avoiding junk bonds, tech stocks, and the US dollar.
In dissecting the tangled web of America's financial plight, Empire of Debt leads readers to an alarming realization. The U.S. is facing an economic crisis of epic proportions, and unsustainable borrowing practices, combined with consistently increasing federal spending, are to blame. As its global standing and credibility diminishes, all signs point to an inevitable collapse of the American financial empire. Bonner's book serves as a sobering reminder of the cyclical nature of empires, and underlines the consequences of failing to learn from the past. His insights on essentialism encourage investors to focus on making informed decisions to help build financial stability in an uncertain future. Ultimately, this book is a cautionary tale for individuals and nations alike, emphasizing the importance of fiscal discipline and the danger of letting debt control the course of history.